Last but not least, our final speaker for this panel and for our event is Effie Pillarino, who is a global fintech influencer based in Switzerland, I believe. And I think you've got some slides as well, Effie.
Yes.
Okay,
thank you,
welcome.
Very
great to have you.
Thank you for the introduction, and thank you, the Economist of Southeast Europe, for the invitation. And I really enjoyed my co-panelists, co-speakers, and the previous speakers too. And what I'd like to add as a final touch to all these elements and to the puzzle of how to build the resilience in financial markets, I would rather say in the economy in a broader sense. I want to speak about elements that I see globally already emerging and what needs to be done along those lines. So resilience varies, like digitalization. It varies across the region, but it also varies across the subsector of financial services. However, payments remain core to financial services, and especially during this crisis, which unfortunately came bundled. It came bundled with unemployment, it came bundled with credit and funding crunch, with disruption in supply chain and trade, and basically revealed all the weaknesses of the payment systems. And I stress the word systems because we have many systems and many cross-border payment challenges. And add on to that the fact that governments were faced with this huge bundled shock that required them to take unprecedented measures and also to transfers of wealth in order to avoid economic and social collapse, basically. So the first item that has been emerging to build resilience globally is the realization that programmable money has huge benefits. We knew it before, but now it's become of strategic importance. And that's why we see the rise of stablecoins and specifically central bank digital coins, the CBDCs. So I'm not referring to privately issued stable coins, the Libra first version that came out last year and of course created a lot of hustle and bustle and threats. I'm more talking about stable coins, fiat-backed from central banks. And we are seeing the emergence and the focus on this topic. We see China already having its own stable coin, the DCEP, digital currency, electronic money. It's live in a very sort of fenced way. They're piloting it in few major Chinese cities in specific sectors like transportation and health. But we also see on our side the European Central Bank looking into the possibility of issuing a euro stablecoin. Lithuania is stepping up, the central bank there, France. So add to that the fact that the BIS, the Bank of International Settlements, has taken a deep dive into the research of stable coins and central bank digital currencies. And they've set up a sandbox, a regulatory sandbox to test blockchain-powered financial services. So this is part of building resilient systems, and there's all sorts of CBDCs to be considered. We can have retail CBDCs, we can have wholesale, we can have hybrid or tiered, if you want, CBDCs, depending on what is the aim of the central bank and the government, what they're trying to accomplish with it. For example, in the US, since they used the PPP program, the Payment Protection Program, and the aid that was given in China during the crisis, they have interest to use these stable coins, these CBDCs, to distribute and transfer wealth. All in all, I must say that this results in rethinking money, in rethinking the role of commercial banks. Are we disintermediating commercial banks? In the case of China, of the DCEP, that is the case, because that coin is all about being able to do peer-to-peer payments between wallets without the need of any bank. But for other jurisdictions, this might be very different. The second element that I want to highlight and is connected to stable coins and also, of course, to building a resilient economy is the rise of interest or focus on UBIs, Universal Basic Income Schemes. During the COVID-19 crisis here in Europe, Spain and Denmark used what they call interim UBIs. Right now, in the recovery phase, we are seeing specifically Scotland being very bullish, so to speak, on implementing the UBI. We're also seeing in the US a different partnership, which is amongst 15 mayors of different US cities. And Jack Dorsey, the CEO of Twitter and Square, he's funding the initiative with $3 million to design and implement a UBI for the cities of these 15 mayors. Can we show the slide, please? I got carried away. So the two elements that, as I said, are changing what the money is, programmable money, how to use it, what is the role of commercial banks, what is the role of central banks in dealing with the pure business and economic problems that are solved through these technologies. As the previous speakers mentioned, banks can solve the problem. I would rephrase that and say fintech technology deployed by whoever, whether it's banks or startups or governments or agencies, can solve business and social problems. And next slide, please. The other element that is also emerging through this crisis is that we are seeing, especially in the West, new kinds of partnerships. Before this crisis, in the fintech space, in financial services, we were already seeing partnerships between fintechs, partnerships between fintechs and incumbents, banks and insurance companies. Now we are seeing governments, central banks, regulators, agencies collaborating with digitally ready, digitally savvy private businesses. The UN is an example, GovTech and Civic Tech. Mr. Anastopoulos spoke earlier about the successful GovTech transformation of Greece. These are all examples that require a collaborative effort between the public sector and the private sector in order to extract value. And this is, again, a new element of strategic importance in building resilience in an economy and in financial services. So I would say that these three elements, the next slide, please, are, sorry, not the right order of the slides, but these elements of taking stable coins, central bank digital currencies, customized for a specific economic purpose, considering some UBI form for the transfer of wealth, and then building partnerships that are broader than the usual ones between the private sector. These are strategic elements to build resilience in financial services and in economy. And I want to close with two or three sort of regional observations. One is that if we look in the East, the super app model, the TechFin model that was born and grown in the East through Alibaba, Tencent, and the collaboration with the government there, has actually been validated even more through this crisis. In the Western developed world, what we have seen is that we need to accelerate, and we already started this acceleration of GovTech and Civic Tech, and this requires the three-way collaboration that I spoke about earlier. And last but not least, in the Western, if you want, developing markets, Africa, Latin America, and so on, what we have realized through this crisis is that even though fintech has accomplished a lot in terms of financial inclusion through, mobile money and fintech applications, this penetration has been very shallow. This realization is a tough one, but we have to face it, and we have to eradicate poverty and go deeper and use technology for this purpose. So I'd like to close with this, and of course I'm open to discuss a lot more details about these big movements or trends, if you want, around stable coins, CBDCs, UBIs, and partnerships if we have the time.
Thank you very much indeed, Effie.